Hello guys and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. As always, in today's video we're going to be looking at the crude oil market as well as the gold chart. Just before I start today's video, I just want to make it very clear that I do currently have a position open in the crude oil markets and I'm still waiting for something to happen over in the gold market for me to open a trade. But if you would like to understand my strategy in depth, then please head over to my streaming service over at dailymarketmovements.com. I've left the website link at the bottom of this video's description, and I've just updated this in-depth long video where I explain my strategy and I also share my signal that I've opened in gold. And of course, when you do subscribe to the streaming service, you have access to all these videos where I cover various markets as well as my educational content. And of course, most important of all, you get access to the Telegram chat where I've also posted those signals. But back to the crude oil markets. Crude oil is looking very strong at this moment in time. We've just closed out with a series of higher lows. Now this is very bullish. This means that we're still in an uptrend. You know, I think we've rallied roughly 38%. I think it was last time I checked. We've rallied 38% since the beginning of August. There we go, 38.5%. And things are looking great. We've been rejected on three occasions up here on the 1% fib retracement zone, but that's to be expected. And we've been pushed back down towards the 50-day EMA. And as you could even argue that we are forming a slight wedge here. If I just draw some quick lines, there we go. We have our top, and then we are starting to form a wedge, and eventually this wedge will get smaller and smaller, and it could force a breakout towards the upside, especially now that we have that 50-day EMA following that wedge line along with us. You could also argue that we're still trading upon this uptrend line, which is still intact. We've respected the bottom of this uptrend line, and we bounced nicely. So I really do anticipate a strong move here for the crude oil markets. The fundamentals looking great. We're already seeing analysts out on Wall Street call for $250 oil. I'm not saying that we're going to get to $250 oil, but I think $100 is a respectable target, especially going into Q1 and Q2 next year. I don't believe that we will get to $100 before the end of this year, but Q1, Q2 next year, $100 is a reasonable target. So things are looking great here for crude oil markets. And as well as that, look down here on the RSI. We are down at 52. So we have plenty of room to run towards the upside. All this fall that we've seen here from the $85 price level down towards 80 to 6% fall here. All that is just basically the RSI recharging its batteries, creating value so that other investors like yourselves, like you and I, can get in and then push it even higher. So I think $90 is my target going into the end of the year. We've still got another month and a half left, and I honestly think that we could easily get to $90 before the year end. So things are looking great for crude oil markets. As I mentioned at the start of this video, I do have a trade open in crude oil, and if you would like to copy or follow me on that trade, then head over to my streaming service. That strategy, my oil position, is in this video here. You don't want to miss it because I do have very high expectations for it. Moving over to the gold markets. Gold, of course, last week broke out. We got that move that we've been heavily weighted for the past 18 months. Okay, we've been in this downtrend since we peaked up at the all-time highs up at $2,067 back in August 2020, and it's required a lot of patience from the gold bulls. But this week we finally got that key breakout, which is fantastic. It sent us towards a 0.5% fib level. We haven't quite made contact with it yet. But there are three things that a market can do when it breaks out of a key area. Number one is that it can just keep going up, and then the RSI becomes heavily overbought. Like that's what we saw when we achieved our all-time highs back in August. And look what happened afterwards. When the RSI just becomes really overbought and extended, you likely see a huge pullback towards the downside. The good news is that we haven't seen that. Yes, the RSI is considered to be overbought, but it's still at 70, so it's not horrendously overbought. The second thing is that, and this is a very typical move, and I think I explained this on the previous video, is that you can see a pullback to go and test the previous resistance area, and then if we find support there, that typically launches you even higher. Okay, that could still potentially occur. We haven't back tested the previous roof in the market. And the third thing that could potentially happen, which I believe is happening right now, is that you just simply consolidate. And this is a fantastic move. We have seen gold break out. We are consolidating, and it could potentially cause a bullish flag, whether it's like this, or we might form a little downtrend where as we slowly work our way back down towards 1830. But this is very bullish. We are holding on to these gains. We haven't just seen a pop out and then a move back down like a false breakout like we do typically see in some markets. Normally you can just see a breakout and then it just comes back down as fast as it pretty much shot up. So we haven't seen that. So things are looking great for the gold markets. We're currently holding on to 1867. As I mentioned, the 0.5% fib level is up at 1875. Very likely that we do go and target that, and if we can break above there, that opens up the doors towards the 1921 area. I think I mentioned in previous sessions that we are currently trading in this A, B, C correction, where of course the C leg is lower than the A leg. And I've been making it very clear in the previous videos that it's so important that we break above this 1830 area. This is an area where we've been rejected previously, but that marks the B zone. And what typically happens once you break through the B zone is that you go straight to the top of the A zone, which is all the way up at 1970. And this is a movement that we've seen over in the Bitcoin markets. We had this A, B, C correction. We went and tested the B. What happened once we broke above the B? Well, we shot up straight towards the A. And, we've even actually gone higher with Bitcoin. I'm not saying that's going to happen for gold, but, from a technical perspective, once you break above this B area, you typically go straight to A. And if that was the case for gold, as I just showed you, 1920 would be the price target. So I do explain this in more depth over on the streaming service video, so make sure you go and check it out. You do not want to miss that, and you especially do not want to miss my signal here in the oil markets. But I thought I would just touch base with you all, keep you updated with regards to the gold markets and crude oil. But thank you very much for watching today's video, and I will see you shortly.